Pending order. So we'll continue where we left off. A pending order is used for the opening of a trade position, provided that the future quotes reach the predefined level. Of course, there are different types of pending orders that we'll dive into in this section. A. The buy-stop order. A buy-stop order overcomes the issue that we faced in the limit order. Consider a stock whose price is $10, but you want to buy 100 shares of the said stock at $10.50. In a limit order, the trade would have been executed immediately at $10. But in the case of a buy-stop order, your trade will execute only when the market price hits $10.50. So a buy-stop is a pending buy order that you can place above the market price. Orders of this type are usually placed when you anticipate that the price of a security after reaching a certain level will just keep increasing. B. Sell stop order. Now, we've already talked about how a sell stop order overcomes the limitations of limit orders. So let's say you're considering a stock whose price is again $10. You want to sell 100 shares of the said stock at $9.50. Now, under a limit order, you wouldn't have been able to do this. But with a sell stop order, your trade will be executed only when the market price hits $9.50. So a sell stop is a pending sell order that you can place below the market price. Orders of this type are usually placed when you anticipate the price of a security after reaching a certain level will keep falling. Now remember that the first two orders, buy stop order and sell stop order, get fulfilled at the market price when the price reaches the stop price. D. Buy stop limit order. Buy stop limit is a mix of buy stop order and a buy limit order and combines both of its features. Let's say you're considering buying a stock whose price is currently $10 and you want to buy the stock at $10.60. What you do here is you set a buy stop limit order with a stop price at $10.50 and a limit price at $10.60. What happens then is when the market price hits $10.50, it'll turn into a buy limit order for $10.60, and the buying takes place only when the price hits $10.60. What we see here is that as soon as the ask price reaches the price target indicated in the order window, a buy limit order will be placed at the level specified in the order window. E. Sell stop limit order. Similar to buy stop limit orders, a sell stop limit is a combination of features of a sell stop order and a limit order. Let's consider, for the nth time, that you're considering a stock whose price is $10, but you want to sell the stock at the price of $9.40. So you set a sell stop limit order with the price at $9.50 and a limit price at $9.40. In this scenario, when the market price hits $9.50, it'll turn into a limit order to sell at $9.40, and the selling takes place only when the price hits $9.40. As soon as the bid price reaches the price target indicated in the order window, a sell limit order will be placed at the level specified in the order window. Stop loss order. Okay, let's say you enter the market and take a position in one of your trades, but you have a feeling things might go south and you might lose money. That's where a stop loss order jumps in and helps you mitigate your losses. A stop order or stop loss order is used to limit the losses in a trade. Placing a stop order will help you protect your position, which will automatically get exited if the market price reaches the set price. Let's say that you're considering a stock whose price is $10. You deduce that the price might go up, and you take a long position with a stop order price of $8.50. Now, if the price drops to 8.5, your stock will automatically get sold, and your loss will be limited to 1.5. Similarly, let's say you think the price might fall, and you take a short position with a stop order price of 11.5. If the price rises to the limit price, your position would automatically close, and again, your loss would be limited to 1.5. Stop limit order. I do hope you understand the concept of a stop order and limit order, because our next concept, the stop limit order, combines the features of stop and limit orders. In a stop limit order, you would have to place an order with two prices, the stop price and the limit price. Once the stock price hits the stop price, your order becomes a limit order, and the position gets closed at the limit price. Unlike stop loss orders, stop limit orders guarantee a price limit. On the other hand, a stop order guarantees execution, but not necessarily at the stop order price. Let's say you own a stock that's currently trading at $10, and you decide you'll sell the stock if it dips below $9, but only if the stock can be sold at $8 or more. So what you'll do here is set a stop limit order by setting a stop price of $9 and a limit price of $8. If the price of the stocks fall below $9, your order will become an $8 limit order. Trailing stop order. If you've read about trailing stop orders before, you might think that a trailing stop order is similar to a stop order. Rather, trailing stop order is an advanced type of stop order, which you can use to avoid big losses and book profits and when the position moves in your direction. As the name suggests, trailing stop orders trails your stop price along with the market price. Now, as always, let's try to understand that with this, the help of an example. Suppose you consider a stock trading at $10. You buy the stock at this price and set a trailing stop order of $1.5. This now means that your stop price would be $8.5, and if the price goes down, your position will get squared off at 8.5. But now consider that the price goes up to 12. So what will happen here is that your stop price will trail to 10.5 since you set your trailing stop order at 1.5. If the market price of the stock rises to 14, your stop price would again trail to 12.5. The beauty of this order is that if the price starts falling from 14, your stop price will stay at 12.5 and your position will square off if the market price hits the stop price at 12.5. With trailing stop orders, you will be able to protect your profits and limit your losses. Although a trailing stop order is generally associated with a long position, it can also be used with a short position with the similar logic of stop price getting trailed down. In such a case, the stock will be purchased if it hits the trailing stop price.